Good day, Ira Epstein with your SPDR ETF video, and this is your wrap-up for Wednesday, the 12th of February, 2020, and we're about 4:15 in the afternoon. Well, risk on day, a big way that it is. Look at all these spiders that went to the upside. Even the energy ones took off to the upside. Where we saw the market slip back because it's a risk on day is the gold market, the currency markets against the dollar. The pound was about unchanged. And when you look at the TLT and the silver, they were down. The oils, they got their bid too. So let's take a look at what's going on. The market, as you can see, is just hanging right here, moving to the upside, as the marketplace is thinking that, for whatever reason, right or wrong, the market seems to be reaching a decision that the COVID-19, which is the coronavirus, is reached a peak in China. Now, it certainly looks like it has in the Wuhan and Hubei provinces, but I don't know outside of that. But what I do know is China's telling people to go back to work. I know China's changed its methodology of the count you're going to get on cases. Now you have to both test positive and you have to have a symptom. So if you test positive but no symptom, they're not counting that in the areas. That's very important. It changes the baseline. So we're waiting to see what goes on here, how long this goes on. Do the people return to work, and do the supply chains start gradually coming online? Marketplaces don't wait for it, they anticipate, and this market's trying to move to the upside. As you can see, you had an inside day today. You've got also a pattern of higher lows, higher highs that you've had in place. The market has been staying over the 18-day average of closes. It slipped back on it back in December. You've had probes of it recently, but it wasn't able to stay under it. So this market is still very much in the risk on, bullish stage, whatever you want to call it. The resistance is right here. Do you see these black lines, one there and one here? The market's going to trade within those 95% of the time. It's an algorithm built to do that. When the market gets outside of the band, we can call it a bit excessive, be it to the upside or the downside, but it's only going to do it 5% of the time. And again, it's all a math equation. I also look at momentum. And when the momentum starts locking in, and locking in means both of these numbers have to be up over 3 days over 80, and then I call that locked in, and I use the word embedded. So when you have an embedded reading until that red line closes back under 80, the way it did here, and then it lost it, that's when I look for corrections of size to set in. Size, well, wherever that 18-day average is the first objective I have. It doesn't mean it always works. In fact, nothing always works. But when you look, you get to see, here you lost the embedded reading. It came back up to this point, and then it went down there. So don't think you do it, and boom, there's an art to this, and as it is in so much trading. But the market is still bullish, in a resistance zone, and it's locked in the upside momentum. The industrial sector is not the same. It is overbought. It has an uptrend. It hasn't hit its upper resistance yet, the upper Bollinger Band at 85.50. There's no magic. It doesn't have to. What you don't want to see in this market is it getting back under the last break low of 2 days ago at that 83.42. That would break the pattern of higher lows, higher highs. In the energy sector, if we take a look at this embedded idea that I have, and you see it right here, it's fully at work. You lose that reading, the odds favor. I wish I could tell you it's always going to work. I'm never going to say that. The odds favor price, and the closest of the moving averages, this case it's the 18, that happens to be the 100, and this is the 200 all the way up there. But they're going to try to make a run at each other typically. You'd have to re-embed the next day for that not to be the case. Can that happen? Absolutely. But you need a pretty reasonable break for it to occur. It didn't occur, and you pulled back. Now, there's going to be a combination of events. This is a moving average, so the longer it takes for the price to get up there, the lower that number is going to go. Here you've got 3 days. Now it starts up, and boom, you hit it. So there was an edge here for what I call those that were short. If they believe in that, they might have wanted to cover their shorts. Some people might want to play the long side. There is a way to do it. I teach it in my charting course, so there's ways to look at it. I call them lost embedded slow stochastic trades. In QQQ, you have your embedded reading. So you've been running to the upside anyways from right here, the line in the sand trade, that 18-day average. You got to the Bollinger Band, you're pulling back and forth on either side of it. It's very typical of a bull market, and that's what you have right here. On the emerging markets, traders think that eventually this type of trade's going to come alive. It's been hurt, no question, with what's going on in Asia with China and all the supply chains that revolve around Chinese trade, but you do have the higher lows. So we can look at this. This higher low came in yesterday. Today you're getting a little bit of the follow through. Why is it a little bit and not a lot? We are already overbought. That's one reason. Let's assume the market tries to overcome that. Well, then maybe we're going to go back to the upper Bollinger Band, wherever it's at. Where's the support? I'd view it at the 18-day average. But because you're overbought, I think the more savvy trader isn't trying to come in on oversold, overbought conditions. In gold, there is nothing going on, but there is behind the scenes. Do you see this winding up of sideways action? Think of a pipe. You got a spring in it and you're tightening that pipe. Eventually it's going to break out one way or the other. We have the resistance of the upper Bollinger Band, the support of the lower one. You're flatlining right on that 18-day average. And momentum, well, it's trying to point down a little bit. And I can give the bears a small edge here because I do have lower highs, lower lows, and the settlement at 147.54 is under the 18-day average. Is it enough to get excited about? I've got my doubts. I hate those sideways actions. They generally poke holes in you with your trading. You've got something similar in the gold miners. Let's assume they break down. Why? Because the trend is down. Lower highs, but higher lows, oversold. But if they break down, I'm going to look for support at the Bollinger Band, the 100-day average. Let's assume the market, instead of getting through this low of 28.02, takes off and gets over 28.53 and can get over this 28.55 intraday. As long as you don't get under that low, you might attract people and they'll say, okay, that's the shot where we're going to try the upper Bollinger Band. It could also be where you're just getting chopped around like in the gold. This is a hard market right there. When we lost the embedded reading in TLT, and you did it right here on this day, this was done last February 5th, the market had already made its run towards that Bollinger Band, towards the 18-day average. All it's doing now is retesting that zone. The momentum is down, the trend is down, but the bias is up. You've got to close under 142.97 to turn the bias down. Next support is between the 100-day average at 139.99, 138.72. Remember, this market will go down as real rates go higher. In the euro, look at how this market's just getting the heck beat out of it. It's just running to the downside. It's a combination of the big engine there, Germany, which is 40% of the European engine, if you will. It's seeing a big slowdown. The U.S. is really putting the pressure on behind the scenes. Doesn't like the trade deficit we have. We've resolved our issues with other countries. Guess who's in the gun sight? The market's preparing for that. That's what I think is going on. So you put it all together, I'll come back to this chart, and these will have to fill in as we go here. And they will, but we're done with that part anyways. Now, let's talk about what I can offer you. In the afternoons, at approximately 3:15 to 3:30, I am recording and posting a SPDR ETF video with very specific buy-sell. The colors look totally different than this. The colors are black. They're like my morning subscriber video for my futures. That is where I really have the liberties. Buy here, sell there, do this. It's not generalizations. It's exactly what that is. It's free right now. So if you'd like to try it, just go to our website, www.iraepstein.com. Sign up for the free trial. We have to send you a user ID and a password. We will. No credit card. Try it. See if it makes any sense to you. You can also click here to get right to that page. I'm Ira. You have a good day. I'll see you all tomorrow.